Ladies and gentlemen, the stock market got absolutely destroyed today. S&P 500 down about 3.6%, even down slightly here and after. I was getting a little bit of a bid from the bottom, but the markets overall got destroyed. And here's a little fun fact. The Nasdaq 100 falls 13% in April, which is the largest monthly drop since 2008. Amazon closes down 14%. Not a good day overall for the market. So we have a lot to talk about, ladies and gentlemen, what to expect for next week and exactly what you guys need to know, because this is going to be either the short-term bottom or this is going to lead into a much larger event. So let's dive into it. Hit the like button, subscribe to the channel, do what you guys got to do. Let me know your thoughts on this move today. We actually as well seen a $7 billion market on close, a $7.3 billion market on close. The last time this actually happened was on the S&P 500 back here when the markets did drop about 4% in a day and then ultimately did revert back. So that was just a fun fact. If you guys don't know what market on close means, MOC, it essentially means the orders that are going through at the last minute. So there was definitely a rush to get out of positions, and you're likely seeing a lot of margin calls that are currently going on with individual stocks. Some stocks are rallying really hard. Look at Redbox right now, right? But margin calls are really happening for these hedge funds and institutions because the margin debt is still extremely high. If you look at FINRA margin debt, you can see the margin debt is still way up there at about $800 billion. So there's a lot of room to continue to come down. And what we have seen from earnings, which is kind of the most worrisome part about all of this, what we have seen from large earning decliners like Netflix, like Facebook, last earnings, they tend to trend down for quite a while, even if they do get small bounces here and there like we've seen with Amazon. Amazon was down like 20% at one point, did only close down 14%. They've seen a little bit of a bounce, but the continuation is likely to happen here with those stocks, as well as, in my opinion, it could be for the broad markets as well. This is definitely not setting a good tone. This is actually the lowest close that we have seen of 2022 right here. We did bottom out at 409.37, but this is the lowest close. So there's a lot to talk about. First things first, though, I do want to talk about next week and the Fed. So we're selling off into the Fed, and it's expected the Fed is going to raise rates by 0.5%. Now, if they come in lower than 0.5%, they come in at 0.25%, that's going to be a very good thing. If they come in at that 0.5%, it's really 50-50 what's going to happen to the markets, because on the one hand, we just got GDP that showed a decline. So if we get one more quarter of declining GDP growth, we are technically in a recession. Well, if the Fed comes in and they only do 0.25%, people might say they're not doing enough to get inflation down. Stock market could sell off based off of that. Or if they come in at 0.5%, there could be the argument that, hey, you're going to push us into a recession, everybody panic and sell everything, right? There's two sides of the coin, and there's a good argument for both of those. So let me know down below in the comment section, what do you guys think is ultimately going to happen coming at the Fed meeting? That is next Wednesday. So midway through the week, exactly 4 days, 21 hours, and 54 minutes away, you're expected to get that Fed 0.5% rate hike. That's what the markets are firmly pricing in. Pretty much a 50 basis point rate hike at every Fed meeting throughout the rest of this year. You can see all of these are sitting at 100%. So you got a lot of moving parts going on right now. You still have earnings coming next week, but they're not the large stocks. They're not the stocks that are necessarily going to move the markets in a very dramatic way. So that is the thing, and we do have some economic data for next week as well that I do want to go over with you guys. Let's do next week. Let's go ahead and see. The Fed is going to be the main thing, so just keep that in mind. But you do have some other things as well. JOLTS job openings, that's going to be very important. That is the March data, expected to be a high volatility catalyst event. You do have API weekly crude oil inventories as well. That is on Tuesday. And then on Wednesday, you have ADP non-farm employment change. That's very important for the Fed. And you also have ISM non-manufacturing PMI for Wednesday, crude oil inventories again on Wednesday, FOMC statement on Wednesday, the Fed, the statement, the Fed, that's going to be the biggest data point, but especially the jobs data will be important Tuesday as well. And initial jobless claims comes in Thursday. So you do have some economic data. The Fed is going to be the main key, and it could get quite ugly here pretty damn quickly, in my personal opinion, especially if these earnings that are coming next week on Monday, Tuesday, and Wednesday are bad. That's going to really not be a great thing for the markets. Let's just call it that. And you also did have some news out of China that China is going to be stimulating their economy, like doing what we did over the past 2 years. China is going to be doing that now. And that's why a lot of Chinese stocks were up massively today, and that kind of helped our markets just a little bit. Without some certain stocks like Apple reporting some decent numbers, you likely would have seen the markets down even more than that. We could have fell 7%. We could have been talking about a circuit breaker instead of just 4% on the NASDAQ. So Apple held up a little bit, definitely better than a lot of the other large cap tech stocks, and then China stocks really did help the markets as well. So that is basically that. Now let's dive into AMC specific data that you guys need to know, and let's go ahead and pull this up. So the option activity for the day was 49% positive order value, $161.96 thousand dollars worth of orders. And then for the short interest, you're looking at 18.96%, cost to borrow max of 2.73%, current shares that are sold short of 97.72 million, utilization of 100%, and days to cover sitting at 2.5. So this, it's one of those things where there's a lot of shorting going on, but I don't think it's all being reflected here in this Ortex data. Unfortunately, that we don't get the best data reported with Ortex, but that's what we have to work with, as you guys already do know. Now, you are seeing a lot of puts every single day that are coming in that are helping to drive down AMC stock as well. Now, AMC was only down 1.92% here on the day. So comparatively to what the broad markets did, NASDAQ dropping 4.17%, S&P down 3.63%, even the Russell 2000 down 3%, the Dow down almost 3%, AMC only dropping 1.92%. In my personal opinion, take it for what it is, I think is a very, very good thing. Or, well, that's including the move here in after hours, but 2.17% still on the day is not bad. That is actually very, very good. So AMC still showing a lot of strength and holding up very, very well. This after hours move is going to be pretty important. We did fall 3.6% on the SPY, so if we can't make a decent recovery here in after hours, then that's going to be a big problem for the market. So that is basically that. As far as AMC and the key levels, where we currently sitting at $15.30 per share to close out the day. After hours, like I said, is pretty volatile, but I also did indicate this on the live stream last night, and I was talking about this for a while now. I think AMC is going to hold up a lot of support around $15 per share. If the markets do continue to sell off and we do go into a crash-like event, then sure, we could go under 15. I don't necessarily think that is going to happen, and that's not where I would put my money at this current point, right? I'm not gonna buy puts on AMC. I'm not gonna short AMC. Obviously, I buy and hold. The moves that we are seeing, only down 2% on such a bad day, is a sign to me that at least we are holding a lot of strength, and we're likely to continue to hold a lot of strength heading into the future. $15 is going to be a key level. Under that, you want to watch that low that we did hit back in March when the markets did sell off at $12.90 per share. Call it $13 per share. That's going to be the key level. That's what I will be really watching and paying attention to. I simply don't think we're going to fall under 15. I think it's likely that the markets do bounce coming on Monday. It's likely, in my personal opinion, but it's not impossible to see the markets continue to sell off like this, especially with the margin levels that we are currently at. So it's not that I'm bearish on AMC. It's actually the opposite. I think it's going to do well, but due to the external factors going on, like the Fed next week, the volatility, right? Bad earnings from Apple and Amazon, it's going to be a little bit of a weird situation from here on out. So that is basically going to be all for this video. Not too much else to actually add. We'll go ahead and take a look at the max pain, and that is sitting at, is that really the max pain? it said $17 per share. Hold on. Hold your horses, because that would be great. I mean, market makers, they are scamming in this market environment, and they definitely like to pin stocks where they're going to make the most amount of money. And yeah, $17.50 is the max pain for next week, so it would not surprise me given that, as well as the sell-off today, the likely bounce that we will see on Monday, to see this stock head back up to the 17 range. Definitely would not surprise me if we do, for whatever reason, see a big bounce. Watch 18.29. That's going to be the key level to see if we do find resistance around there, or if we can come up, and this level will turn into a support level if that does happen. The next most important level is the 100-day moving average, sitting at $20.22 per share. So that is going to be all for this video. Let me know your thoughts, comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.